Hey there, savvy investors! Welcome back to our channel, where we dissect the investment masterpieces of the world's greatest value gurus. Today, we're diving into the wisdom-filled ocean of Warren Buffett's 2023 annual letter. So, buckle up, because we're about to embark on a journey through the mind of the Oracle of Omaha himself. Number 1. Don't be a stock picker. Be a business picker. When it comes to investing, Warren Buffett and his partner Charlie Munger have always stressed the importance of focusing on the long-term prospects of businesses rather than getting caught up in short-term stock movements. They advocate for being business pickers rather than mere stock pickers. In the world of stock investing, it's easy to become fixated on the daily fluctuations of stock prices. However, Buffett reminds us that what truly matters are the underlying business prospects. So, the next time you're making an investment decision, ask yourself, am I investing in a stock? Or am I investing in a business? By shifting your mindset from being a stock picker to a business picker, you can align your investment strategy with the principles of successful investors like Buffett and Munger. Instead of solely focusing on stock prices, you'll consider the long-term viability, competitive advantage, and growth potential of the businesses you're investing in. Remember, investing in a business means looking beyond the stock ticker symbol and delving into the company's fundamentals, such as its financial health, management team, industry position, and future prospects. This approach allows you to make more informed and strategic investment decisions that have the potential to generate sustainable returns over time. So, the key takeaway here is to prioritize the underlying business when making investment decisions, rather than being swayed by short-term stock movements. By adopting a business-picking mindset, you can enhance your investment strategy and focus on the long-term success of the companies you choose to invest in. Number 2. Efficient markets exist only in textbooks. Alright, buckle up, because we're about to dive into the wild world of market efficiency. You see, when it comes to efficient markets, Warren Buffett isn't exactly buying what the textbooks are selling. According to him, the reality is far from what those dusty old tomes would have you believe. In the land of investing, opportunities are like hidden gems, waiting to be discovered by the patient investor with an eagle eye. They're not just lying around in plain sight, but they're there, lurking beneath the surface, ready to be unearthed. So, here's the deal. When the market is all frothy and bubbly, with valuations reaching for the stars, it's time to take a step back and reassess. Don't get caught up in the frenzy of the moment, my friend. Remember, the stock market is like a voting machine in the short term, but a weighing machine in the long term. In other words, don't let the market's daily noise distract you from spotting those hidden gems that have the potential to shine bright in the long run. It's all about looking beyond the surface-level hype and finding those undervalued, overlooked opportunities that others might have missed. So, the next time you hear the market screaming and shouting, take a deep breath, put on your detective hat, and start searching for those diamonds in the rough. Because, let's face it, the best investments are often the ones that go against the crowd and defy the conventional wisdom. Remember, my fellow investors, the textbooks might have their place, but when it comes to the real world of investing, it's all about being sharp, being savvy, and being willing to challenge the status quo. So, go out there, embrace the chaos, and uncover those hidden treasures that will make your portfolio shine. Now, if you'll excuse me, I'm off to hunt down some investment gems myself. Until next time, stay sharp and keep searching for those market inefficiencies that can lead to big wins. Happy investing, my friends! Number 3. The weeds wither away in significance as the flowers bloom. In the world of investing, Warren Buffett, the renowned investment maestro, offers us a captivating metaphor that beautifully captures a crucial lesson. Buffett emphasizes the significance of selecting a few winners that consistently perform well over time. He illustrates this point by demonstrating how a handful of successful investments can outweigh the importance of any unsuccessful ones. Imagine an enchanting garden of investments where not every plant will flourish. Some will inevitably wither away, but fear not, for this is part of the journey. The secret lies in nurturing the flowers that exhibit promise and allowing them to bloom. Ultimately, it is these blossoming flowers that will transform your investment garden into a thriving oasis. Now, let's break away from the conventional and infuse a fresh perspective into our exploration. Picture this: a vibrant tapestry of investments, each one representing a unique opportunity. As you navigate this garden, you'll encounter a variety of plants, some thriving and others struggling. But amidst this diversity, remember that your focus should be on identifying the gems, the investments that possess the potential to flourish and yield substantial returns. In this metaphorical garden, the weeds symbolize the investments that may not perform as expected. They may falter, lose value, or fail to meet your desired outcomes. However, instead of fixating on these setbacks, Buffett encourages us to shift our attention to the flowers, the investments that exhibit promise and demonstrate consistent growth. Just as a skilled gardener tends to their plants, diligently watering, fertilizing, and providing the necessary care, as an investor, you must nurture your promising investments. By dedicating your resources and attention to these blooming flowers, you allow them to reach their full potential, contributing significantly to the overall success of your investment garden. Remember, it is the collective impact of these flourishing investments that will overshadow the significance of any underperforming ones. By focusing on the winners and allowing them to thrive, you create an environment where your investment garden flourishes, yielding bountiful rewards. So, as you embark on your investment journey, embrace Buffett's metaphorical wisdom. Seek out the flowers, nurture them with care, and watch as your investment garden transforms into a vibrant and prosperous landscape. Number 4. Gains from value-accretive repurchases benefit all owners. Now let's dive into the fascinating world of share buybacks and unravel the logic behind them. Warren Buffett enlightens us on the profound impact of value-accretive repurchases, emphasizing how they can benefit all shareholders. However, he also warns us about the perils of overpaying for these repurchases, as it can harm the interests of continuing shareholders. Imagine a scenario where a company decides to repurchase its own shares at prices that enhance their value. This strategic move not only boosts the company's financial health, but also creates a ripple effect that extends to all owners of the company's shares. As a shareholder, you stand to benefit from this value creation as the repurchased shares become scarcer, potentially increasing the value of your remaining shares. But hold on, before you start celebrating every share buyback announcement, Buffett urges us to exercise caution and discernment. It's crucial to evaluate whether the buyback is truly value-accretive. In other words, does the company repurchase its shares at prices that are advantageous and likely to generate long-term benefits for shareholders? If the answer is no, it might be time to reassess your investment in that particular company. So, how can you determine if a share buyback is value-accretive? Take a moment to analyze the company's financials, assess its growth prospects, and evaluate the price at which the shares are being repurchased. By conducting this thoughtful analysis, you can make informed decisions about the potential impact of the buyback on your investment. Now, let's break away from the ordinary and explore a fresh approach to understanding the significance of value-accretive repurchases. Imagine yourself as a savvy investor, equipped with the knowledge to identify companies that execute buybacks with precision and foresight. As you navigate the investment landscape, you become adept at recognizing the subtle nuances that separate value-accretive buybacks from their less impactful counterparts. In this dynamic environment, the concept of value accretion becomes your guiding star. You seek out companies that possess a deep understanding of their intrinsic value and have the discipline to repurchase shares at opportune moments. By aligning your investments with these astute companies, you position yourself to reap the rewards of their value-enhancing strategies. So, the next time you encounter a company announcing a share buyback, resist the urge to jump with unbridled joy. Instead, channel your inner investor and ask yourself the critical question: is this buyback truly value-accretive? By adopting this discerning mindset, you empower yourself to make sound investment decisions and safeguard your long-term interests. Remember, in the realm of share buybacks, it's not just about the announcement itself, but the underlying value creation that truly matters. Embrace Buffett's wisdom, be vigilant, and let your investment choices be guided by the pursuit of value accretion. Number 5. Charlie Munger's nuggets of investment wit and wisdom. Now let's delve into the treasure trove of investment wit and wisdom shared by the legendary Charlie Munger. Munger's insights encompass a range of valuable lessons, including the significance of patience, rationality, learning from the past, and focusing on long-term investments. In the fast-paced world of investing, it's easy to get caught up in the frenzy of short-term gains and losses. However, Munger reminds us that investing is not a mere sprint. It's a marathon. It demands a unique blend of qualities: the ability to exercise patience, maintain rationality, and possess an attention span that can outlast the market's unpredictable fluctuations. As Munger eloquently puts it, the big money is not in the buying and selling, but in the waiting. Now let's break away from the ordinary and infuse a fresh perspective into our exploration of Munger's wisdom. Imagine yourself as an investor with the endurance of a marathon runner, equipped with the mental fortitude to navigate the twists and turns of the investment landscape. As you embark on this marathon, you embrace the power of patience, recognizing that true wealth is not built overnight, but through steadfast dedication and a long-term perspective. In this metaphorical marathon, rationality becomes your guiding compass. You resist the temptations of impulsive decision-making and instead rely on a well-reasoned approach to investing. Munger's wisdom reminds us that emotions can cloud judgment, leading to hasty actions that may not align with our long-term goals. By cultivating a rational mindset, you position yourself to make sound investment choices that stand the test of time. But Munger's wisdom doesn't stop there. He encourages us to learn from the deceased, drawing upon the knowledge and experiences of those who have come before us. By studying the successes and failures of past investors, we gain valuable insights that can inform our own investment strategies. Munger's emphasis on continuous learning serves as a reminder that the pursuit of knowledge is a lifelong journey, one that enriches our understanding of the investment landscape. So, as you embark on your investment marathon, embrace Munger's nuggets of wisdom. Cultivate patience, maintain rationality, and draw inspiration from the lessons of the past. Remember, investing is not just about the short-term gains. It's about building a solid foundation for long-term success. Let Munger's words guide you as you navigate the marathon of investing, and may your journey be filled with wisdom, growth, and ultimately, financial prosperity. And there you have it, folks. 5 key takeaways from Warren Buffett's 2023 annual letter. Remember, investing is not just about getting rich quick. It's about learning, growing, and understanding the businesses you invest in. So keep learning, keep investing, and let's grow our wealth together. Until next time, remember, the stock market is filled with individuals who know the price of everything, but the value of nothing. Stay savvy, investors. If you found this video helpful, don't forget to hit that like button, share it with your fellow investors, and subscribe to our channel for more investment wisdom. And remember, in the words of Buffett himself, someone's sitting in the shade today because someone planted a tree a long time ago. So let's start planting those trees, shall we?